The credit score reveals only a partial picture of the borrower, and certain aspects of a person's financial activity can shed more light on how well they meet with the obligations of a car loan. Someone with bad credit, for example, might have the income to make the monthly payments required of a bad credit car loan, and may have assets accumulated to cover the balance of the loan should something happen to their main source of revenue. A lender can take this into account when determining if that person meets the criteria for approval. Further, the auto loan applicant's financial history may have included some emergencies, as catastrophic illness, natural disaster, or other upheaval, that might have led to a sudden drain on his or her cash reserves. While this may have caused some damage to that person's credit, there may be indicators that the individual was able to do everything responsible people do to recover from such events. This can all be revealed in a credit report. Anyone who has engaged in any financial activity that didn't involve the exchange of cash will have generated an annual credit report. This document contains the entire financial history of an individual, from rent payments to mortgage payments, the opening of a new credit card account to the failure to pay off old credit card debts. Although the report follows an individual's financial transactions in minute detail, there is a chance that some entries in the report can contain errors which can be disputed and corrected. This can improve a person's credit score depending on how significant that mistake is. A credit report can be obtained from any one of the major credit reporting bureaus: Equifax.com, Experian.com, TransUnion.com, or FreeCreditReport.com. How a lender deals with bad credit before approving a car loan has to do with the expectations of the borrower and what the borrower will do through the end of their agreement. A sensible client won't try to get financing for a luxury vehicle that's clearly beyond his or her ability to pay for within the time frame set by the car loan agreement. Likewise, a lender won't approve a car loan that is beyond the means of the borrower. There are differing views with regard to whether the prospective borrower should shop for the auto loan first or the car. The type of car that is being financed can have an impact on the sort of financing a car buyer can get. But what kind of financing is available to the borrower can impact the type and quality of the car being bought. A balance can be struck, as in most things, between shopping for a car and a lender, and someone who has bad credit can do a few things to ensure that the financing will go smoothly and the car purchase will result in a car that meets that person's needs. Since every car manufacturer and dealership maintains an online presence, it's possible to review one's car choices before ever setting foot on a car lot. Such websites not only display their car specials, they often advertise car loan deals, which include offers aimed specifically at people struggling with bad credit. With the ability to choose a car in a suitable price range far from dealership salespeople, it's possible to make an informed choice on a vehicle that fits within a given budget. The ability to research the right vehicle is made easier by websites like Edmunds.com and Kelley Blue Book's KBB.com. Since neither of these websites are in the business of moving product for any particular car dealer or manufacturer, they can provide clear data indicating the prices a prospective car buyer should expect to pay for a new or used vehicle. They can also narrow that information to cars being sold in any particular area of the country. Federal Auto Loan. Good credit, bad credit, no credit, all good.